Bitcoin Depot just delivered their Q2 2025 earnings results, and the numbers are impressive. The crypto ATM giants saw their net income nearly triple while expanding their global footprint to nearly 9,000 machines. But there's more to this story than just growth numbers. We're seeing signs of a maturing business model that's generating serious cash flow. Let's dive into what these results mean for investors and the broader crypto adoption landscape. Starting with top-line revenue, the original estimate for Q2 was $168 million. The company actually reported revenue of $172.1 million, surpassing expectations by 2.4%. This quarterly revenue also marked a 5.5% increase compared to the $163.1 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was 14 cents. The company actually reported an EPS of 16 cents, exceeding expectations by 14.3%. This result also reflects a 26-cent increase compared to the loss of 10 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Bitcoin Depot's gross profit surged 32% year-over-year, reaching $30.9 million. This wasn't just about growing the top line. They expanded their gross margin by a substantial 360 basis points to 17.9%. That's a clear sign that their kiosk optimization strategy is paying off, with better performing locations driving higher profitability per machine. The adjusted EBITDA story is even more compelling. They increased EBITDA by 46% to $18.5 million, demonstrating the operating leverage in their business model. Once they cover their fixed costs, additional revenue drops significantly to the bottom line. This scalability is exactly what investors want to see in a growth company transitioning to profitability. Net income nearly tripled to $12.3 million, a dramatic improvement from the $4.4 million they reported in the same quarter last year. This wasn't just accounting magic. Their operating cash flow doubled in the first half of 2025 to $26.4 million, showing real cash generation capability. However, it's worth noting that their total debt balance rose to $69.7 million, up from $60.9 million at the end of 2024. Much of this increase came from profit-sharing arrangements with partners, which they account for as debt under GAAP rules, though these actually represent strategic partnerships that help expand their footprint. Now, let's look at the strategic insights that signal where Bitcoin Depot is headed. They're operating approximately 9,000 active kiosks, with another 1,700 sitting in inventory ready for deployment. This inventory represents significant growth potential without additional capital investment in machines. Their international expansion is gaining traction, particularly in Australia, where they've deployed over 200 kiosks. Australia ranks third globally in Bitcoin ATM adoption, making it a strategic market for expansion. Management is also evaluating entry into at least 2 additional countries in 2025, showing their commitment to global growth. Consumer behavior trends are encouraging. The median transaction size jumped 30% year-over-year to $300, indicating either growing confidence in Bitcoin or users making larger investments per transaction. This directly impacts profitability since their fee structure benefits from higher transaction values. A key operational metric to watch is their 3,300 kiosks installed for less than 1 year. These machines typically see payback periods of less than 8 months and are still ramping up to full performance. As these locations mature, they should contribute significantly to future cash flow growth. Strategic acquisitions are also part of their growth playbook. They acquired Telcoin's assets in the second quarter, gaining stronger presence in the Gulf South. This consolidation strategy makes sense in a fragmented market where they can acquire machines more efficiently than smaller competitors. Looking ahead, management expects Q3 revenue growth in the high single digits compared to last year, with adjusted EBITDA growth of 20% to 30%. This guidance suggests continued momentum in their core business while they expand geographically. The bigger picture here is that Bitcoin Depot is evolving from a pure growth story to a cash-generating machine. Their kiosk optimization strategy is working, international expansion is progressing, and they're consolidating market share through strategic acquisitions. With nearly $60 million in combined cash and digital assets, they have the financial flexibility to continue executing this strategy. That wraps up our recap of Bitcoin Depot's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.